Hey guys, welcome back. Going to be speaking a little bit about Canadian real estate. The market's just been on fire and defying all odds as it climbs to all-time highs. Prices don't seem to be slowing down at all. We have stock markets at all-time highs. Everything's climbing, and yet the economy appears to be in the tank, and all kinds of businesses are going under, but yet asset prices continue to soar. So why is that? I'll share my thoughts in this video, but if you haven't already, hit like on the video, subscribe to the channel. I often talk about this kind of stuff and just share my thoughts as an average Joe. I'm not a professional, and this isn't advice in any way, but I do like to share my thoughts, and hopefully it just inspires you guys to think outside the box a little bit and look at some of the factors that might be contributing to this so that hopefully you can make better decisions. I've made a lot of poor decisions in the past and had to learn a lot of things the hard way. So hopefully with sharing some of my thoughts and past experiences and observations, that will inspire you to do a little homework before you maybe make some big mistakes like I have in the past. And if we look at things radically honest, then hopefully we can, look at some of the factors that are taking place and we can make better decisions that way. So with that being said, what do I think's contributing to this crazy spike in home prices? Even though we have the economy in the tank, we have small businesses going out of business at record rates, we have huge unemployment and all of that, yet prices continue to climb. So I think part of the reason is we had the stress test come in back in 2017, I believe it was. And what that did is it required banks to tack on 2 points in the interest when they're looking at how much money they can lend you. So if interest rates our lending rates were at say 2%, they had to do the calculations with a 4% interest. That way it gave them a bit of a buffer in case rates did go up, then they could ensure that you were going to be able to pay back the money with that increase in interest rates. So what happened there is they put that policy into place and all kinds of people couldn't qualify for the mortgage that they could have only the year before that. And so people had to buy smaller homes in order to satisfy these new regulations. And then what happened is they had to lower rates to keep things going because the economy just couldn't support it. The market started getting really weak and there was a lot of fear coming into the market and we were seeing weakness. And so the Bank of Canada decided to lower rates 1.75%. And then what that did is it allowed these people to come in and refinance and look at getting bigger homes at these new interest rates. So even though the stress test was requiring them to look at it with 2% above, because rates had dropped 1.75%, now people were able to buy larger homes. So I think a lot of this is people refinancing and taking advantage of the lower interest rates. And then we also see a large amount of money printing going on, and the government of Canada is giving out record levels of free money. They're supporting businesses, they're allowing mortgage deferrals. And so we're having just a tremendous amount of capital come into the system. And so we had probably the largest rise, definitely the quickest and largest, I believe, rise in savings rates in Canadian history. If you look at that graph, it spiked up something like 20% in a month or two. And so all of a sudden, Canadians had a bunch of money in their banks that they didn't have in the past. And anyone who's savvy with money understands that the currency is being debased. So people are looking to get rid of that currency as quick as they can. At least the savvy investors are. So that also put some money in the hands of people. So they had a little more capital. They weren't traveling. And then we also had a lot of measures put into place that were requiring people to stay home. You weren't allowed to go out. Businesses were shut down. Restaurants were shut down. People were on lockdown. They weren't allowed to visit friends. You're not allowed to go to church, all of these things. So people were really just being cooped up at home, locked up at home. And so then I think that forced a lot of people to really look honestly at their lives and say, is this what I want? If I'm on lockdown, do I want to live in a little 300 square foot apartment in the city and pay this high rent when I can't enjoy any of the luxuries of the city? You can't go out to restaurants, you can't go out to music shows, and now a lot of people are able to work remotely. So a lot changed in a short while. And so I think that left people reevaluating things and realizing that if they can work remotely, then they could move out to a less populated area, and they could get a lot more home for the same value or the same cost, and it could allow them to have a backyard and a garden and a little more space, and maybe live in an area where they're not being so closely monitored by the general public and regulators and enforcement agencies and all of that. And so I think a lot of people are choosing to move to more rural areas and just in order to experience a little more freedom. And so I think we're seeing that shift as well. We're seeing retirees, if they were considering retiring at some point in the next 5 years, I think a lot of retirees decided to just call this a good opportunity to enter retirement. I don't think a lot of them, of the baby boomers, want to deal with the new regulations and all the changes taking place. So I think we're seeing a lot of these people that were close to retirement are now choosing to retire. And then what that does is they look at all of their funds, they put everything together, they have the time to really assess their situation, and then they're deciding to sell and shift around. So they're selling off some of their assets, they're moving around, they're buying the house that they wanted, they're moving to the area they wanted to be. They no longer have to be in these urban centers to earn their money. They're now in retirement, so they can move to less populated areas and take advantage of some of the lower prices that we had in the more rural areas. So these people, because asset prices were pushed up so much in the last 10 to 20 years, people just made a fortune on real estate in some of these big metropolis areas. And so they're cashing out, they're selling their homes there, and they're moving to less populated areas and taking advantage of the lower prices. And I live in one of those areas, and so we're just seeing prices go crazy. There's bidding wars taking place. Things are selling in days or weeks, and there's so many buyers and there's very little inventory on the market. And so that's creating a lot of hype, and people, I think, they're making bad decisions, or not necessarily bad decisions, but they're making decisions very quickly and almost out of like panic and fear, rather than looking at all of the numbers and all of the factors. So I personally think that that's what's going on. I think we're just seeing kind of this huge rush to make decisions and to quickly move around, and when prices are getting pushed up so quickly and there's very little on the market, there's a pressure there to jump in and to get something before it's all gone. And I feel that pressure myself. I don't want to live in the city. I want to have something where I have a little bit of space. I hopefully have a rental income and something so I can produce cash off that property. I don't just want it being a hole in my pocket. And so, I feel that pressure where everyone's buying, there's very little on the market. You don't want to get stuck with nothing. You see your currency being debased, and you see the purchasing power getting destroyed, and home prices are going higher and higher. So that puts a lot of pressure on people to make a decision quickly. And when you're forced to make a decision quickly, you don't always make the best decision. So I'm trying to do my best. I'm meditating a lot, and I'm really trying to practice patience and fortitude, and just really try and sit patiently and make sure that I'm making the right decision here. At the same time, I do see what's going on with the currency debasement, which often leads to inflation, and so asset prices could inflate even higher. And so I really think it's important to just keep an eye on all of this, and personally I'm hoping to sit patient for a while here and just kind of see which route we go. Do we go into deflation, where asset prices actually start to come down because of all this debt and liquidity, a bit of a liquidity crisis after this initial shifting around of everyone? Or do we go right into inflation, where all of this free money they're giving out starts to come in and reflect in asset prices. So that's what I'm watching, and that's what I suggest you guys keep an eye on. And when you go to buy something, try not to get too emotionally attached. I really like to crunch all of the numbers. So, look at property tax, maintenance costs, utility costs, any other fees that might be associated, insurance, the cost of carrying the mortgage, and then also look at what happens if rates go up, because that has happened in the past. When inflation starts to ramp up, then governments, historically, what they've done to combat that, if inflation gets away on them, they'll actually raise rates. So I don't think that's likely in this current environment, because everything is so reliant on cheap money that if they did that, everything would pop. We'd have all of the markets would crash, real estate would crash, the governments would be in big trouble because they're so heavily indebted. And so really, I think they're backed into a corner. I think they're going to have to keep rates low, and if anything, they'll be going negative, in my opinion. But it is something to consider. And so I look at all of those carrying costs of purchasing that piece of real estate, and then I look at the income potential, because if it's just a place to live and it's just a home and it's not going to produce you any money, then it's a liability. And sure, you could say, well, it's going to cost me this much to rent anyways, so you would save potentially some money in rent, but then you also have huge risk if the market does turn around and you're stuck. You've signed an agreement and you're on the hook for that much money, hundreds of thousands of dollars or millions of dollars. Here in Canada, the average price is, I think, well over 700,000 now for a detached home. And there's a lot of rural areas in Canada that are dirt cheap. And if you're looking at any of the popular cities, you're looking well over $1 million for a decent detached home. So that's crazy. That's a lot of money. So really, don't be jumping into anything. Really, you want to weigh these things out. Look at the past. Look at what happened in the Great Depression, where there was all this hype. Everyone was rushing to get in. And then things turned almost overnight. Mortgages were seen as a nightmare. No one wanted to have a mortgage. Most people couldn't sell their homes. There was a liquidity crisis where people couldn't get money. There was no buyers. And it didn't matter what you were listing your home for. There was just no buyers. No one had cash. No one had jobs to support these big mortgages. So that's what I'm looking at. I'm wondering how people are going to afford these just astronomical home prices. And sure, a lot of people that got in early, they just sell a home and they have the capital, so it's not a big deal for them. But we need new buyers to keep this thing going. We need new people to come into the market. If all the boomers that are retiring want to sell, we need new buyers to come in and buy those homes. And with a lot of our immigration grinding to a halt because of this new situation we're in, then we don't have the immigration that they were hoping for, where I think that was the initial plan, was to bring in a lot of immigrants and that they could be the new buyers that would help push prices higher. And then we have the younger generations that traditionally would come and buy their first home and all of that. But now the newer, younger generations can't even afford entry-level homes. If you're looking at an entry-level home, you're looking at a minimum of $400,000 in most places in Canada, upwards of $500,000, $600,000 in most areas. And if you do the math on that, you can't even really afford that if you're making $200,000 a year. And that's at record low interest rates. So what happens if rates normalize and go back to the 60-year average of 7%? We would just have disaster in our economy. There would be so much for sale. You could come in and buy houses for $1. That's what happened in the 80s and back in the Depression and stuff. So things can turn, and they can turn quickly. And the backside of bubbles are often they go down a lot quicker than they go up. So I'm not saying that's what's going to happen, but it is something I'm keeping an eye on. I've been kind of thinking this would happen for a while, but with the amount of money they're giving away for free and printing and all of that, it's hard to believe that we might have deflation, because all of that comes into the system in the form of inflation. So we really could just see asset prices continue to inflate, and that does scare me. I don't want to be left not owning. I don't want to be renting. It's always been my goal to own my home, and not so much as a speculative investment, but I want to own a family home. I don't want to be at the mercy of some landlord and all of that. But if prices keep going the way they do, I honestly might just let go of that dream and just rent, because there's just a lot less risk with rent. And with this current situation, you can pick up good rentals. So if you get a good cheap rental right now and you lock in that price and you stay there long term, it doesn't matter if we have crazy inflation, because they're at the mercy of the regulations, and they can only raise rents like 1.5% a year. So you could really lock in a good rental rate right now and just stay there and don't move, and then take advantage of that, so that way you could shelter yourself against inflation. So that's a way, if you don't have the capital to get into a new home, that's a way you could take advantage. You could lock in a good rental rate, make sure you have a lease agreement and all of that, so they can't kick you out, and you know, you want to protect yourself that way. But that's one way you could do that. And then you could take the bit of capital you have and you could really use that to either invest in your own education and learn some new skills, or you could learn to invest in different assets that you could invest any amount. You don't need to put in hundreds of thousands, or you could potentially use it to grow a business, or all kinds of things. So I just like to think outside the box. I don't want to feel backed into a corner and forced into a bad decision that I could be stuck in for decades to come, and all of that. So I'm keeping a close eye on things, and I'll keep you guys posted with my thoughts. I hope you enjoyed the video. Let me know in the comments what you guys think, what you're doing. Let me know your plans and how you guys are all viewing this. I'm always curious to see what others are thinking and doing, and hopefully we're all making the right decisions, and that we can better ourselves for the times ahead. I hope you guys are well wherever you are, and I'll see you in the next video.